Welcome to Just Web Redaction. Today we're going to continue looking at the solutions of accounts paper 2 of 2016, and specifically we're going to look at section B. We'll look at question 4B. So before we proceed looking at the solutions for this question, make sure you download the question paper in the description section so that it can be easy for you to follow through. So question 4B reads, Mambo Tembo is an importer of second-hand clothes whose trial balance as at 31st December 2015 is given below. So trial balance as at 31st December 2015. So we have sales amounting to 191,600, purchases 96,680, then returns outwards amounting to 1,920. Then we have opening stock amounting to 21,560. Then we have wages amounting to 23,000. We have motor vehicle expenses amounting to 13,000. Premises at cost amounting to 120,000. Then we have motor vehicles at cost amounting to 40,000. Then we have provision for depreciation on motor vehicle amounting to 30,000. Then we have provision for depreciation of premises amounting to 24,000. Then we have lets amounting to 15,400. Then we have light and heat amounting to 9,900. Then we have general expenses amounting to 12,400. Then we have discount received amounting to 10,600. Then we have provision for bad debts amounting to 1,120. Then we have returns inwards amounting to 11,600. We have discount allowed amounting to 5,400. Then we have 8% bank loan repayable on 30 June 2019 amounting to 60,000. Then we have cash amounting to 540. We have bank amounting to 3,360. We have debtors amounting to 37,000. Then creditors amounting to 19,500. Then we have drawings amounting to 22,620. Then we have commission received amounting to 22,900. Then we have capital amounting to 70,000. Then insurance amounting to 5,900. And the totals on both the debit side and the credit side balance with the figure of 435,000. The question proceeds additional information. The first additional information we have stock at 31st December 2015 was valued at 25,200 kwacha. Then the second information we have 20% of wages was carried inwards and 80% for selling expenses. Then the other information we have depreciation is to be charged on premises at the sale of 1% per annum on cost using the straight line method and 25% per annum on delivery motor vehicles using reducing balance method. Depreciation of delivery motor vehicles to be shared the ratio of 4:1 to selling expenses and carriage inwards. Then the other additional information we have interest on loan is due on 31st December 2015. The other additional information we have insurance in advance amounted to 900 kwacha and electricity due amount to 260 kwacha on 3rd of December 2015. Then we have provision for doubtful debts is to be maintained at 3% of debtors. We are required A. Prepare trading profit and loss account or income statement for Mambo Tembo for the year ended 31st December 2015. That's 20 marks. Then B, balance sheet as at 31st December 2015, 14 marks. So we're going to start with A. We're going to prepare the trading profit and loss account or income statement for Mambo Tembo for the year ended 31st December 2015. So before we can prepare the trading profit and loss account and the balance sheet, we need to find our workings for the additional information. So let us find our workings there. So the first additional information we have stock at 31st December 2015 was valued at 25,200. So this was at 31st December 2015. So this is going to be our closing stock. So let us look at the stock that we have been given in the trial balance. And the stock in the trial balance was recorded on 1st January 2015. So this is our opening stock. So the one that we have been given in the additional information is at 31st December 2015. So that's going to be our closing stock. So let us record that. So you can say that our first additional information there, our closing stock, we're going to record it as 25,200. So this amount of stocks, the one that we're going to put in our balance sheet. Let us look at the second additional information. So the second additional information, we have 20% of wages was carried inwards and 80% for selling expenses. So let us look at the amount of wages. So the amount of wages there, as you can see, we have 23,000. We have 23,000 kwacha. So this 23,000 kwacha, we're going to separate it into two, or we're going to split it into two. We're going to split it into carriage inwards of 20%, and we're going to split it into 80% for selling expenses. And that means that when we split the wages, when recording the profit and loss account, we're not going to record our wages, because these wages is going to be split into carriage inward and selling expenses. So two there, we're going to say our carriage inwards. So for the carriage inwards there, we know that it's 20% of the wages. So we're going to say 20 divided by 100 multiplied by the cost of wages. It's 23,000. So that's going to be 4,600 kwacha. Then for the selling expenses, it's 80% of wages. So we're going to say selling expenses. This is 80% of wages. So multiplied by 23,000. And our answer there, it's 18,400. Let us look at the other additional information. So the third additional information reads, depreciation is to be charged on premises at the sale of 1% per annum on cost using straight line method, and 25% per annum on delivery motor vehicles using reducing balance method. Depreciation of delivery motor vehicles to be shared with a ratio of 4:1 to selling expenses and carriage inwards. So let us calculate the depreciation of premises there and the depreciation of motor vehicles. So that's going to be our working 3. So we're going to start with that of premises. So premises, we have been told that we're going to use straight line method. We use straight line method, and the depreciation that we have been given as 1%. So it's 1% using straight line method. So the only thing that we're going to do is to identify the cost of premises in the trial balance. So the cost of premises there, as you can see, our cost, it's 120,000. So for us to calculate the depreciation there, we're going to say our cost of premises, we have 120,000. So multiplied by depreciation of 1%. And since we are using straight line method, this is going to be direct. So we're going to say multiplied by 1 divided by 100. So the cost of depreciation there, we're going to have 1,200. So we have 1,200. Then let us look on how we're going to account this in the balance sheet. And on how we're going to account this in the profit and loss. So this is going to be recorded in the profit and loss. So we're going to show 1,200 in the profit and loss on the expenses. Then let us look at the other information that we have been given. And the other information that we know is that provision for depreciation of premises we have been given as 24,000. So there we can say that the provision for depreciation of premises we have been given as 24,000. Then the depreciation that we are just from calculating, it's 1,200. So we can add these two. So there we are going to have a 25,200. So a 25,200, that's the amount that we're going to transfer to the balance sheet. Then 1,200 is the amount that we're going to transfer to the profit and loss under expenses. So let us write down that point. We can say transfer 1,200 as depreciation to the profit and loss, and we are going to transfer 25,200. So transfer 25,200 to the balance sheet. Let us look at the other additional information that we have been given. So the other additional information, we have 25% per annum on delivery motor vehicles using reducing balance method. Then depreciation of delivery motor vehicles is to be shared with the ratio of 4:1 to selling expenses and carriage inwards. And that means that for there, we're going to charge it on selling expenses, and there carriage inwards represents a 1. And we have 25% there. So the first thing before we calculate depreciation for motor vehicles, we need to identify the cost. So the cost that we have been given for motor vehicles, the cost here we have been given as 40,000. And since we are using reducing balance method, we also need to identify the provision for depreciation on motor vehicles, and we have been given as 30,000. So before we multiply our 25,000 to the cost there, since we're using reducing balance method, we are going to say 40,000 minus 30,000, and we're going to have 10,000. So we're going to say 10,000 multiplied by 25 divided by 100 for us to calculate depreciation for motor vehicles using reducing balance method. So we can say motor vehicles. So for the motor vehicles, we know that we are using reducing balance. So we are using reducing balance method there. So the first thing that I said is to identify the cost. So the cost, we identify it as 40,000. Then we are going to say less provision for depreciation. So we have provision there for depreciation, and we saw that our provision for depreciation in the trial balance is 30,000. So our answer there is going to be 10,000. And for us to calculate depreciation for motor vehicles there, we are going to say our 10,000 that we have calculated multiplied by the depreciation, and depreciation is charged with 25%. So 25 divided by 100. So our answer there is going to be 2,500 kwacha. So this 2,500 kwacha, we have been told that it's going to be shared in the ratio of 4:1. So before we share that to before we share 2,500 in the ratio of 4:1, let us calculate the amount that we're going to transfer to the profit and loss. So the provision for depreciation of motor vehicles, we have been given as 30,000, and we have calculated our depreciation as 2,000. So we have depreciation there. We have calculated it as 2,500. So we are going to add that 30,000 plus 2,500. We're going to have 32,500. So this is the amount that we're going to transfer to the balance sheet. So there we can say transfer 32,500 to the balance sheet. Then let us look at the question again. So the question says depreciation of delivery motor vehicles to be shared with a ratio of 4:1 to selling expenses and carriage annually. So the depreciation that we calculated there amounted to 2,500. So we have to share it in the ratio of 4:1. So let us calculate that. So it's supposed to be calculated in the ratio of 4:1. So there we have been told that 4 represents selling expenses and 1 represents carriage inwards. So we're going to say our selling expenses there. Our selling expenses, we have been told that the ratio is 4 there. So we're going to say 4 divided by, and we're going to say 4 plus 1, we're going to have 5. So 4 divided by 5 multiplied by the depreciation that we calculated for the motor vehicles is 2,500. So we have 2,500. And there our answer is going to be 2,000. Then for carriage inwards there, we have been told that the ratio is 1. So 1 divided by 5 multiplied by 25,500. Our answer there is 500 kwacha. And since we have calculated our selling expenses as 2,000 and our carriage inwards as 500 kwacha, let us now adjust the amount of carriage inwards and selling expenses. So at first there, we calculated our carriage inwards as 4,600. So we are supposed to add that to 500. We're also going to add our selling expenses. Our selling expenses at first we calculated as 18,400. So we are going to add it to 2,000 that we have just calculated. So we're going to put our adjustment there. And for our adjustment, the first one we have our carriage inward. So at first carriage inwards we had calculated 4,600. So we're going to say 4,600 plus the one that you have calculated, which is 500. So the answer there, we have 5,100 kwacha. Then the second one that we have is our selling expenses. So our selling expenses there, at first our selling expenses that we calculated amounted to 18,400. So plus the one that we're just from calculating is 2,000. So plus 2,000. So our answer there is going to be 20,400. Let us look at the other information that we've been given. So the fourth additional information reads, interest on loan is due on 31st December 2015. Yeah, in the trial balance there, we have been given as 8% bank loan repayable on 30th June 2019 as 60,000. So let us write down the fourth additional information. So our fourth additional information, we have interest on loan, and interest on loan there in the trial balance we have been given as 8%. So it will be 8 divided by 100 multiplied by the cost of the loan was at 60,000. And when we calculate, the figure there is going to be 4,800. And how we are going to account that one, so we can say how we are going to account that one in the profit and loss. So put it in profit and loss under expenses, so it will appear under expenses. So put it under expenses in profit and loss, and we're going to put it under current liabilities in balance sheet. So it's going to appear under the current liabilities in the balance sheet. Let us look at the other additional information. So the fifth additional information reads, insurance in advance amounted to 900 kwacha and electricity due amount to 260 kwacha on 3rd December 2015. So here we can see that our insurance in advance, that's going to be a prepaid, and our electricity due, that's going to be our accrued. And how we treat insurance in advance, or a prepaid in the profit and loss, we are going to subtract it from insurance because it was paid in advance. Then for the electricity due, which is an accrued, how we account it in the profit and loss, we are going to add it to light and heat. So as you can see here, in the profit and loss, we have been given as light and heat. So before we record this one under expenses, we're going to add the electricity due. And before we record our insurance have been given as 5,900. We are going to subtract that amount that had been paid in advance. So let us write down these points. So we have number 5 there, and we're going to say we have insurance paid in advance. So we're going to say insurance prepaid. That amounted to a 900 kwacha. So we're going to say subtract from insurance under expenses in profit and loss and put it under current assets in the balance sheet. So that's how we're going to account for that transaction. So we are going to say subtract from insurance under expenses in profit and loss, and put it under and put it under the current assets. Put it under current assets in the balance sheet. Then for the electricity due, so for the electricity due there, it's where electricity was used but was not paid for. So we're going to say electricity due or accrued, and the amount that have been given is 260. So we are going to add to light and heat under expenses in profit and loss and put it under current liabilities in the balance sheet. So that's how we are going to account for electricity due or electricity accrued. So we're going to say add to light and heat under expenses in profit and loss, and we're going to put it under the current liabilities in the balance sheet and put it under the current liabilities in the balance sheet. So let us look at the other additional information. So the other additional information reads, the provision for doubtful debts is to be maintained at 3% of debtors. So the provision for doubtful debts is to be maintained at 3% of debtors. So here we need to calculate the provision for doubtful debts on debtors. And the provision of doubtful debts can either be an increase or a reduction. So if there is a reduction in provision of doubtful debts, that means that the amount that we're going to get as the reduction, we're going to record it under the gains or income. But if there is an increase in the provision for doubtful debts, that amount we're going to record it as an expense. So let us write down our workings. So we have been told the provision for doubtful debts is to be maintained at 3% of debtors. So let us look at the amount for debtors. So the amount of debtors that we have been given in the trial balance is 37,000. So we're going to say 3% of 37,000. Then the answer that we're going to find, we're going to compare it to the provision for bad debts. And the provision for bad debts have been given as 1,120. So the first thing that we're going to do, we're going to say 3% of 37,000, and that amount we're going to compare it with 1,120, and we're going to determine whether there's an increase or reduction. So number 6 there. So the first thing that we're going to do, we're going to say the amount for the debtors, and the amount of debtors in the trial balance have been given as 7,000. Then the provision for doubtful debts, the percentage that we have been given is 3%. So our provision for doubtful debts we have been given as 3%. So for us to calculate the provision for doubtful debts there, we're going to say our 37,000 multiplied by the percentage, which is 3%. So that's going to be 3 divided by 100. And our answer there, we're going to have 1,110. Then the provision for bad debts, as we saw in the trial balance there, it was 1,120. So let us check that. So yeah, the provision for bad debts is 1,120. So we can say the provision for bad debts. So the provision for bad debts in the trial balance there have been given as 1,120. Then the provision for bad debts, the one that we're just from calculating. So the provision for bad debts, the provision for doubtful debts, the one that we're just from calculating, we have calculated as 1,110. So to compare this amount, we can see that there has been a reduction there. There's been a reduction of what? Of 10. So we can say reduction in provision of 10. Reduction in provision of 10 kwacha. And how we are going to account that 10 kwacha, we are going to add the reduction of provision for doubtful debts of 10 kwacha to the gains or incomes. Then we are going to subtract the 1,110 from the debtors in the balance sheet. That's how we are going to account for that additional information. So let us write down those 2 points. So the first thing that I've said is that since there is a reduction in provision, so we're going to add the 10 kwacha under gains or income. So gains or income, and the provision for doubtful debts, the one that you calculated as 1,110, we're going to subtract it from the debtors. So subtract 1,110 from debtors in the balance sheet. So we are done calculating our additional information. Now we can look at our question. So question A reads, prepare trading profit and loss account or income statement for Mambo Tembo for the year ended 31st December 2015. And the first thing that we are going to do there is to put up our title. So let us put up our title. So I've already written the title, and the title reads, Mambo Tembo's trading and profit and loss account or income statement for the year ended 31st December 2015. And I've drawn that format, and the currency that we're using is kwacha. So I've written the case. So let us look at the first information that we're going to record. So the first thing that we need to record is sales, and sales amounted to 191,600. So we are going to identify if we have returns inwards in our trial balance. Yeah, and we have returns inwards amounting to 11,600, and return inwards that represents the amount of goods that were sold by the business but have been returned to the business because of different reasons. So we need to subtract the returns inwards from the sales. So we are going to say 191,600 minus 11,600. So there in our income statement, we're going to say sales with the amount of 191,600. Then we're going to say less returns inwards. And I said returns inwards just represents the amount of goods that were sold by the business but have been returned to the business because of different reasons. And the amount of returns inwards, we had 11,600. And when we find the difference there, we're going to have 180,000. So we have 180,000. So this 180,000 is going to be our turnover. That's going to be our turnover. And we know if we calculate the turnover, we need to write down our opening stock. So we'll say opening stock. And the stock that you're going to get your stock at the beginning of the year. So the one that is given in the trial balance, the one that we're going to record. So let us look at the figure for the opening stock. So the figure for the opening stock there, it's 21,560. So we'll say opening stock 21,560. So after writing down the opening stock, we're going to say our purchases. We're going to record our purchases. And we know that purchases can be affected by the carriage inwards or by the returns outwards. So let us look at the figures for the purchases. So the figure for the purchases, we have 96,680. And I've said purchases can be affected by carriage inwards or carriage outwards. So carriage inwards represents the amount of money that is spent on transportation of goods. And since the money is spent on transportation of goods, we need to add that figure to purchases. So we're going to identify our carriage inwards. And the carriage inwards we had to calculate in our workings. So the figure for the carriage inwards that we're going to get is 5,100. So we're going to say our purchases figure in the trial balance is 96,680. Then we are going to say add carriage inwards. And the carriage inwards we had to calculate in our workings was 5,100. So the totals there we are going to have 101,780. And that's going to be our total purchases. Then from that, we know that we have been given the figure for our returns outwards. So we're going to say less returns outwards. And we know returns outwards is the amount of goods that we have bought by the business but have been returned to the supplier. So we need to subtract them from the purchases. So let us look at the figure for the returns outwards. So returns outwards amounted to 1,920. So we have 1,920. So we're going to find the difference there. And the difference we're going to record here, the difference will be 99,860. And that figure is going to be named as net purchases. So after calculating the net purchases, we're going to calculate the total stock available. And how we calculate the total stock available, we're going to add the opening stock plus the net purchases. So we're going to add 21,560 plus 99,860. And we're going to have 121 23,420. So that's going to be total stock available. Then after that, we're going to say less closing stock. So the amount of closing stock is the one that we're given in the additional information. So let us look at the figure for the closing stock. So the amount of closing stock is 25,200. So we're going to say less 25,200. Then finding the difference there, we're going to have 96,220. So that one is going to be named as cost of goods sold. And after we find the cost of goods sold, that means we can find our gross profit or loss. So we're going to subtract 96,220 from our turnover, which is 180,000. So as you can see here, our turnover is greater than the cost of goods sold. That means we're going to have the gross profit. But if it was vice versa, where the cost of goods sold is more than the turnover, that means we are going to find the gross loss. But in this case, we're going to find the gross profit. So calculating the gross profit there, we're going to say 96,220 minus 180,000. And our answer there is going to be 83,780. So we have calculated our gross profit as 83,780. So let us proceed. So we are going to say add incomes. So say add incomes there. So let us identify the incomes or gains in the trial balance. So to identify the incomes or gains in the trial balance, we are going to find that we have discount received there amounting to 10,600. So that's the first income. Then the other income, it's commission received. So we have commission received of 22,900. So in the trial balance, we only have two gains or incomes. So we're going to record those in our income statement. But in our workings, remember that when we were calculating for the provision for doubtful debts, we discovered that there was a decrease in the provision for bad debts. And we said that if there's a decrease, that means that that's a gain or income. So the amount that we calculated was 10. Yeah, so here, as you can see, we have reduction in provision for bad debts. So of 10 there, and we said add 10 under gains or incomes. So which means that we have three incomes. We have discount received, commission received, and decrease in provision for bad debts. So we record the first income there, which is discount received. So discount received amounted to 10,600. Then we have commission received. Commission received amounted to 22,900. Then since there was a decrease in provision for bad debts, that's going to be a gain or income. So we're going to say decrease in provision for bad debts, and that amounted to 10. So we are going to add 10,600 plus 22,900 plus 10, and the answer there, we are going to have 33,510, and that's going to be our total income. So after finding the total income there, we can calculate the total profit. And to find the total profit, we're going to add the gross profit plus the total income, and our answer there is going to be 117,210. So that's going to be our total profit. So we are going to continue, and we are going to say less expenses. So subtract the expenses. So let us identify our expenses in the trial balance. So for the expenses, to identify our expenses, we can start from wages there, and wages amounted to 23,000. But for the wages, we are told that wages was supposed to be split into carriage inwards and selling expenses. And that means that we are not going to record this amount of wages, but we are going to record the amount of selling expenses. So let us look at the amount for selling expenses, the one that we calculated in our workings. So the amount that we calculated was 20,400. So we are going to record that. So the first expense, we are going to say selling expenses. and selling expenses amounted to 20,400. Then let us look at the other expense. So the other expense that we have motor vehicle expenses amounting to 13,000. So we have motor vehicle expenses amounting to 13,000. Let us look at the other expense. So the other expense that we're going to record is depreciation of premises. In depreciation of motor vehicle, we are not going to record it since it was divided in the ratio of 4:1 of that of selling expenses and that of carriage inwards. So we're just going to record the depreciation for premises, and we calculated the depreciation of premises in our workings. So let us identify that. So the premises there, the depreciation that we had calculated is 1,200, and we said transfer 1,200 kwacha as depreciation to the profit and loss. So we're going to transfer that under expenses. So depreciation of premises amounted to 1,200. Let us look at the other expense. So the other expense that we can identify, we can find it in our additional information there. And for the additional information, number 4 there, it reads interest on loan is due on 31st December 2015. So we need to calculate 8% for that loan, and we had to do those calculations. So let us look at the workings. So that's number 4. So number 4 there, we have interest on loan, that's 8 divided by 100 multiplied by 60,000, and we had calculated as 4,800, and we actually said that put it under expenses in profit and loss. So we are going to put that under expenses. So say interest on loan, and that amounted to 4,800. Let us look at the other expense. So the other expense that we have rent and rates amounting to 15,400. So we have rent and rates amounting to 15,400. Let us look at the other expense. For the other expense, we have light and heat amounting to 9,900. But in our additional information, number 5, we are told that electricity due amounted to 260. So that's electricity accrued, and that means that electricity was used but was not paid for. That means that we need to add 260 to light and heat in the expenses there. So we are going to say light and heat. So that amounted to 9,900. Then we are going to add the electricity due. Electricity due just means that the amount of electricity that was used but was not paid for. So we are going to say add accrue, and that amounted to 260. So when we find our total there, we're going to have 10,160. Let us look at other expense. So the other expense that we have general expenses amounting to 12,400. Then we also have discount allowed amounting to 5,400. So let us record those. So we have general expenses amounting to 12,400. Then we have discount allowed amounting to 5,400. So discount allowed amounting to 5,400. Then let us look at the other expense. So the other expense that we have insurance there. So insurance, we have 5,900. But in the additional information, number 5 there, we are told that insurance in advance amounted to 900 kwacha. And that means that insurance was paid in advance, or it is a prepaid. And how we are going to account for that amount which was paid in advance, we're going to subtract it from the insurance. So we're going to say insurance there of amount of 5,900. Then we're going to say less prepaid, which was paid in advance, that amounted to 900. And finding the difference there, we're going to have a 5,000. So since we are done recording our expenses, we're going to find our total expenses. So how we're going to find our total expenses, we're going to add 20,400 plus 13,000 plus 1,200 plus 4,800 plus 15,400 plus 10,160 plus 12,400 plus 5,400 plus 5,000. And our total expenses there, we're going to have 87,760. So our total expenses, we're going to have 87,760 as our total expenses. And since we have the figure for the total expenses, and we also have the figure for total profit there, we can calculate the net profit or loss. And as you can see, the total profit is more than the total expenses. That means that the figure that we're going to find for net is going to be net profit. So when we subtract our total expenses from the total profit, we're going to have our net profit there, and we're going to have net profit amounting to 29,530. So I've calculated our net profit. Let us now look at the balance sheet. So question B reads, balance sheet as at 31st December 2015. So the first thing that we're supposed to do is to put up our title. So let us write down the title. So I've already written the title there, and the title reads Mambo Tembo's balance sheet as at 31st December 2015. And in our first column there, we are going to have our fixed asset. So we can say fixed assets. Then here we're going to have our cost. Then we're going to have our depreciation. Then we're going to have our net book value. And we know that the currency that we are using, it's in kwacha. So we can put the case there. So let us look at the first fixed asset that we have been given in the trial balance. So the first fixed asset that we have been given in the trial balance is premises at cost. So premises at cost amounted to 120,000. And since we have identified the cost for the premises, we need to know the depreciation that we are going to charge to the balance sheet, and we had to calculate that in our workings. So let us look at that figure. So in our workings there for the premises, we had to add the provision for depreciation of premises of 24,000 plus the depreciation that we calculated, which was 1,200, and we had to find 25,200. And we had to say transfer 1,200 as depreciation to the profit and loss. So we already did that. Then transfer 25,200 to the balance sheet. So we are going to transfer 25,200 to the balance sheet. So our premises there, the cost of the premises in the trial balance, we have seen it's 120,000. And in our workings depreciation, we had to calculate as 25,200. So to find the net book value, we're going to subtract depreciation from the cost, and our answer there, we're going to have 94,800. Let us look at the other fixed asset. So the other fixed asset that we have is motor vehicles at cost, which amounted to 40,000. And we had to calculate the amount of depreciation that is going to be charged to the balance sheet in our workings. So let us look at that figure. So the figure that we had to calculate for depreciation that is going to be transferred to the balance sheet is 32,500. So let us record that. So we have motor vehicles, and the cost for the motor vehicles in the trial balance is 40,000. And the depreciation that we calculated was 32,500. So we're going to subtract depreciation from cost. So we are going to have 7,500 as our answer. So here we can calculate our totals. So we're going to say 120,000 plus 40,000, and we're going to have 160,000. 25,200 plus 32,500, we're going to have 57,700. Then for the net book here, we're going to add 94,800 plus 7,500, and we're going to have 102,300. So we can proceed and look at the current assets. So the first current asset that we have that we're going to record is closing stock. So let us look at the figure for closing stock. And the figure for closing stock there is 25,200. So we can say stock, and that amounted to 25,200. Then from there, we're going to record our debtors, and the figure for debtors there in the trial balance, we had 37,000. But before we record that 37,000, we are going to subtract the provision for doubtful debts. And the provision for doubtful debts we had to calculate, and it was on working 6. So let us see that. So on working 6. So on our working 6, provision for doubtful debts, we had to calculate 3%, and that was 1,110. So that means that we are going to subtract the amount for provision for doubtful debts from debtors. So we can say the debtors there, the amount is 37,000. Then we can say less provision for doubtful debts. So less provision for doubtful debts, the figure was 1,110. So the figure for the provision for doubtful debts was 1,110. And finding the difference there, we are going to have 35,890. Let us look at the other current assets that we have. So the other current assets that we can identify them from the trial balance, we can find our cash there, and our cash amounted to 540. And as you can see here, there is bank, but bank in this case is not going to be shown under the current assets because it is on the credit side. And since it is on the credit side, it is representing a bank overdraft, and the bank overdraft is placed under the current liabilities. So there we are going to put our cash there under the current assets amounting to 540. Then we also know that in our additional information there, additional information number 5, we are told insurance in advance amounted to 900 kwacha. So we have insurance prepaid, and insurance paid in advance, we're going to record it under the current assets. So we are going to record our cash and insurance prepaid. So we have cash amounting to 540. We also have insurance prepaid. So our insurance prepaid is 900. And since we are done finding our current assets, we can add the current assets and we find the total. So we are going to add 25,200 plus 35,890 plus 540 plus 900, and we're going to have a total of 62,530, and that's going to be our total current assets. So since we have calculated our current assets, then we can say less current liabilities. So here we can put our less current liabilities. So we have our less current liabilities. So we are going to identify the current liabilities in our trial balance and in our additional information. So let us identify current liabilities. So our first current liability that we can identify there is creditors, and creditors amounted to 19,500. We can also identify bank there as our current liability. And I said since bank was recorded on the credit side, that represented a bank overdraft, and the bank overdraft is a current liability. Then the other thing that we have as a current liability is 8% bank loan repayable. So in our additional information, we had to calculate 8% of 60,000. So let us look at that working. So for the additional information, number 4 there, we have interest on loan is due on 31st December 2015. So let us look at that working. So working number 4. So working number 4 here, we had to do our calculation. So we said interest on loan. So we said 8%, which is 8 divided by 100 multiplied by 60,000. And we had to calculate as 4,800. So this 4,800, we said put it under expenses in the profit and loss. So we already did that. Then also record it under the current liabilities in the balance sheet. So we are supposed to record 4,800 under the current liabilities in the balance sheet. Then the other thing that we need to record in our current liability, let us look at this information. So additional information number 5 there, it reads insurance in advance amounted to 900 kwacha and electricity due amount to 260 kwacha on 3rd of December 2015. So here you can see we have electricity due, and I said electricity due is the amount of electricity that the company used but was not paid for. So this amount has to be recorded under the current liabilities. So we are going to record 260 under the current liabilities, and let us now record our current liabilities there. So our first current liability that we're going to record, we have creditors. Creditors amounted to 19,500. Then we also have bank overdraft. So bank overdraft amounted to 3,360. Then we also identified our interest on loan. We have interest on loan. And interest on loan we had to calculate as 4,800. So we have 4,800 there. Then we also have electricity due. So electricity due amounted to 260. So these are the current liabilities that we identified, and we're going to find the total there. So we are going to add 19,500 plus 3,360 plus 4,800 plus 260, and our total we're going to have 27,920. So I have 27,920. So that's going to be our total current liabilities. So since we have calculated our total current liabilities as 27,920, we can now find our working capital. So our working capital, we're going to subtract the total current liabilities from the total current assets. So we are going to find the difference between the total current assets and the amount here is 62,530 and the total current liabilities which amounted to 27,920. So there the difference we're going to have 34,610. So we have 34,610, and that's going to be our working capital. So our working capital amounted to 34,610. And from there, we can add the fixed assets and our working capital there, and we're going to find our net assets. So for us to find our net assets, we're going to add our working capital, and working capital amounted to 34,610. We're also going to add the fixed assets, and the fixed assets amounted to 102,300. So there are the total we're going to have. So our net assets, the total we're going to have 136,910. So that's going to be our net assets. Then there we can say financed by. Then we say financed by. The first thing that we record there is capital. So capital there, let us identify the amount of capital. So our capital there amounted to 70,000. So we're going to record 70,000 there. So capital amounted to 70,000. Then we're going to say add net profit. So we are going to see the amount of net profit that we calculated. So let us look at the amount of net profit. So net profit we had calculated as 29,530. So we're going to record that amount. So net profit amounted to 29,530. And there we're going to add. So add 70,000 plus 29,530, and we're going to have 99,530. Then from there we can say less drawings. So let us identify the amount of drawings in our trial balance. So drawings there amounted to 22,620. So let us record that. So our drawings amounted to 22,620. And when we find the difference there, we're going to get 76,910 as our answer. Then we can say add loan. So let us look at the figure for the loan there in the trial balance. So the figure for loan there, we have 60,000. So we're going to record that. So the loan amount there is 60,000. So we are going to add 76,910 and 60,000, and our answer we're going to have 136,910. So as you can see, this figure there, which is referred to as the capital employed, is equal to the figure that we calculated for the net assets. So we can say our capital employed is 136,910. So as you can see, the figure for the capital employed is equals to the figure of the net assets, and we can say that our balance sheet has balanced. So that's how you can calculate the income statement and the balance sheet. So where you have questions for everything that we have talked about, make sure you put them in the comment section, and I'm going to attend to your questions. Also, don't forget to download the solutions for this same question in the description section so that it can be easy for you to follow through as you go through this video. You can also support us through our services that we provide. We provide online tuitions, and the subjects that we offer physics, chemistry, math, biology, and accounts. We also sell some full topics videos. We also sell some past papers with answers in form of PDF and in form of videos. We also provide video and photo shootings. So for you to know more about everything that I've mentioned, make sure you check the description section. Don't forget to like, share, comment, and subscribe. I'll meet you in the next video. Peace and God bless.